Hi, Gene, and welcome to Breakthrough Brands. How are you today?
Good, Joe. How are you, sir?
I'm good. We're coming into autumn. The sun is still shining. I've just got some logs delivered, getting ready for the winter, but can't say that. Some of the environmentalists might knock at my door. Um, but, but Gene, the reason why I brought you on the show today, is, to talk about finance, to talk about loans. And, you have Capital Biz. You help small companies acquire some financial reinsurance to actually help them moving into the future. So look, it's great to have you on the show here today.
Well, thank you. It's a pleasure to be here. Just a little background on myself personally. I spent about 18 years as a small business lender and a commercial banker for traditional banks. And about 10 years ago is when I founded Capital Biz Solutions because there's certainly a need for small business owners and even businesses that are generating $5 million in top line revenue to $50 million in top line revenue, where their requests do get turned down from banks. So that's kind of where we come in.
Why do people get turned down from traditional banks? Are the main causes in your opinion?
There could be a number of reasons, or there are a number of reasons. First of all, traditional banks are federally regulated, so they have specific guidelines that they have to certainly abide by. It could be cash flow purposes. The business isn't cash flowing the way they want them to. It could be the industry they're not particularly fond of, where they may have had two or three or several loans in that particular industry that were not performing. So that creates a high risk for them. And there's a number of other reasons also, besides cash flow. I mean, certainly SBA, we do SBA loans, but they are also a cash flow lender. So it's really important and about 60% of these loans that do get submitted to traditional banks get turned down for one reason or another. So we're more than happy to help those folks.
The old story when when the sun is shining, they give you an umbrella, and when it's raining, they take it away. I heard a
That's a great analogy.
you know,
I
I
mean, it's just to interject there for a quick second. A lot of these business owners, when they don't need the working capital, they can obtain it. When they're looking for it, they can't seem to find it. And it's that oxymoron that continues to kind of challenge them. But we've got some really nice programs. We don't try to stick them into a loan facility just to do so. We really want to kind of drill down and find out what their particular need is at the time, what their business plan is, how they figure they're going to grow. We look at a lot of aspects, and we really want to try to take them up the ladder, to a facility that's beneficial. And then hopefully halfway through that term, we can refinance out, obtain additional financing for better terms and rates. And we kind of cover the whole gamut.
you know just as we're talking, what's come to mind is that the banking system has changed. There was a time when you would go into a bank and you would speak to them and you would have a personal relationship with the bank manager. And now a lot of the stuff is, it's not even talking to anyone. It's going online and filling out an application form. And then from you filling out that, non-personality, know about your business piece of paper, there is someone then, an underwriter, making a decision on that. Um, and it's also in, I know a story where there would have been, a bank manager on the other side who would look at someone's details, and if they saw them taking out $200 on a Friday night, they would question the person's um, active or what they were doing with $200 on a Friday night and may reject that loan. But they could have been taking out the $200 to buy groceries the next morning. So, with banking, And like, are you are you kind of saying to companies, look, traditionally banks are can be, sort of have rules and regulations, but I'm offering the personal touch to help you grow your business. Would I be correct in saying that?
Oh, absolutely. We want to grow the relationship just like some of the community banks do. And, kind of piggybacking on what you had said, a lot of the community banks want to build that relationship. And there are a lot of online applications, did mention previously. But the community banks try to do a good job. I mean, look, they want to develop that relationship and they need deposits. I mean, they need X amount of deposits and X amount of loans. They want to have an equal balance. And so we don't focus on deposits. So we're really knocking on the bankers' doors these days, the senior vice presidents of lending teams and business bankers and saying, look at gentlemen, we would like your declines because we can turn those declines into approvals. There's no reason why you shouldn't consider us because we'd like to get that client healthy and then back to the bank where they can obtain a traditional loan. And we don't require deposits. So we're really going after them, in a nice sense because they really care. They don't want to say no. They don't want to say no, but their guidelines force them to do so. So we're really, we have a big push on that, along with business brokers who are always trying to put deals together and get deals financed, which usually for M&A deals and so on and so forth. And we cover a lot of ground as far as loan type goes, but it certainly depends on what the client qualifies for at the time.
Gene, you remind me of a time past when I would have a stack of application forms and I would stroll over to the bank and meet with the bank manager and say, you've declined all these. And we would go in and we would argue the case for the client to get an LOI from the bank. And, it was amazing how a conversation with someone could change someone's life and get them an application, get them an LOI. It was quite it's building those relationships, and that's what you do as well.
Yeah, we really focus on that. We're really not a one size fits all. We don't like, that type of MO. We never did. It's certainly all about building trust, and about building relationships. If someone took a look at our Google reviews online, they would say, geez, would love to give this company a try. So, we're there and committed for them. We just want that reciprocal commitment.
Tell me, you're in business a long time, traditional banking. You know, you have to go by your gut. I think, we make our best decisions looking at the data, but we also really, that final decision is always our gut. You know, what do you look for when you're dealing with an organization and, you have a feeling going, okay, these are good. This is going to be, beneficial to everybody. What's your gut feeling? What do you look for? What your key points?
Well, I certainly like to interview the management team, of the company, and sometimes, it may be only one or two people, but there has to be some type of urgency with the clients that they kind of struck out at their bank, and they really need they really need some guidance. So, it is a gut feeling to a degree. There's no question. Um, but I like to interview them just as we're speaking here today. What are their strengths? I mean, some of these businesses sometimes all of a sudden there's an unhidden expense that just pops up. They may be light on payroll that particular month, and they're scrambling to make payroll. There's numerous scenarios. A piece of equipment could have gone down on them, and they said, "Oh my God, I got to get this thing replaced." Um, I really look at some of the character pieces of these people. I take a look at the company. I do some background on it. But most importantly, we really want to help those folks. We really want to help those folks, and they don't forget it. We've had a lot of repeat business, which is great. Um, and we certainly welcome that. And that's, I mean, as you know, you build one relationship at a time, and that's really how we've done it.
I read a book years ago, Shoe Dog Millionaire. It's the story about Nike. And it was one of the chapters in it was that, this was an international company. They had, you know, sports stars all signed up. And he had a factory with multiple employees and he didn't have the money to pay them. And if
Yeah,
he
there you
didn't,
go.
and if he didn't have the money within X amount of days, this whole operation was going to shut down. And we're not talking hundreds of thousands, we're talking a $1 million company here. And he got a Hail Mary, and someone got the money and they paid the staff, and the company then went on to be even more successful. But it made me realize that, even when we see all these big companies, I'm sure there was a stage when Apple had a problem. I'm sure Google had a financial problem, even though everyone knew them, or Amazon. So people have to realize that those financial problems, no matter if you're a company who has 4 or 5 people, or you're a company that have millions, there's always something that can go wrong that you need to actually kind of go, hey, we need a little bit of cash here to move us forward.
Yeah, I can't agree more, honestly. And you kind of cite that perfectly, from the company that may have 5 employees to a company that has, 200,000 employees. I mean, it's those things do come up, and they come up on a regular basis. So we're there to try to help that client, however big or however small that they are, and give them the guidance that they need, and develop that relationship. I really think that's really the key to all of it. That trusting relationship where they can say, geez, Gene's a pretty good guy. Let's give him an opportunity here. Let's see how he performs. And then, and then when they see the results, they're the first ones to pick up a phone. We always provide a 30-minute free consultation at all times. And once we take care of a client, we're able to obtain a loan facility for them. They can call me personally at any time, at no cost. And, we help guide them through, the next stage.
What businesses, are hot to trot at the moment? We always know there's some businesses that you don't go near because, there's no marketplace, the industry is down or whatever it may be. And, that's even when we're looking to invest in companies, who's the who's the owner? What's the industry like? Will I get my money back? These are the things. But, you know,
Yeah, I mean, I certainly understand. I mean, I think you're looking at now the medical industry seems to be, kind of taking off a bit, and they've got some of these software companies with an AI component seem to hit the marketplace pretty well. Retail, I mean, you see it, it's up and down. Manufacturing, love to bring some of those jobs back to the States here. We certainly have the natural resources here. But to answer your question, I think steadily medical, whether it's something in the spine management or chiropractic industry, which those guys seem to be growing, and the dental industry seems to be growing. So I think healthcare really is on the rise, and I think you can have a really steady flow there. But many businesses are struggling, and it hasn't been the greatest economy. There's been a lot of ups and downs, especially since COVID-19. But yet again, we're there to listen to those conversations and see how we can help it, at that particular time. So
yeah, the PwC came out there with a report, saying there was a lot of retail industries over here, insolvent or going to be insolvent, and you
yeah, they're
know,
struggling for sure, retail.
yeah, yeah, and you kind of it's for them is to actually, okay, what can I do different? What can I think to do without, and a lot of them, you'd be surprised, aren't even shopping or using the online process. They're still waiting for people to come in the door, or it's going to people. So, there's a definite whole new strategy that is needed for a lot of those bricks and mortar companies to survive. And as I say, it's not about getting bigger, it's about getting better. And the ones will
Yeah,
survive in that.
yeah, I could not agree more. And I think they really should think about, at least a small online component, because, everything's changed. I mean, everything has changed, and there's so much that is done online these days. I don't have to tell you. I mean, look at the Amazons of the world. I mean, everything is online, and they're a great company to do business with. I mean, the product is at your door within a couple of days. And if you don't like it, I mean, you get a refund within 24 to 48 hours if you send it back. So
No.
they've got to figure out some type, I believe, of online presence. It doesn't have to be a large online presence, but something that would really help the consumer obtain their product in a reasonable fashion and a quick fashion without them having to visit the store.
Yeah, I think it's customer experience. I think trumps everything. Gene, tell me, say if a company at the moment is out there and going, do you know what, we're looking like we've got some great contracts coming into 2025. At the moment, we've got a little bit of a shortfall. You know, we need to get our ducks in a row to be able to maybe go out and speak to someone to get some funds in so we can stay afloat. What sort of housekeeping should a company do to get themselves to go to look for some equity?
Yeah, I mean, when you say equity, I mean, you're talking about partners that may come in and take a piece of the business. But I would prefer initially, I mean, debt is always less expensive than equity. Um, First of all, they really should have their financials in order, for the last 3 years. Are they making money now? Um, what's their bottom line like? How many employees do they have? Have they been profitable over the last 24 months, 36 months? Or I mean, I think every business has had a bleep on their balance sheet since COVID. However, if the management team is strong and they've overcome those challenges, then they may not have to go seek equity partners. They can say, we have these contracts, they're signed, sealed, and delivered, whether they're purchase orders, whatever the case may be. And then some type of lender, maybe not a traditional bank, will look at that. And it certainly depends too on what the sponsors are like. How strong are the sponsors? What is their personal balance sheet like, their financial statements? So, even lenders in the alternative space really want to get a fix on how strong the company is now and what can we do to help them. And, they mitigate risk just like traditional banks. So I think those components of having strong financials, taking a look at the plan going forward, how the lender can mitigate the risk, and can we help them at the time? I think all of those things where they may not need equity partners, and an equity partner also would ask the same things or recite the same things that I just did or very close to. They're not going to inject their funds into a company that's been losing money on a continual basis.
Yeah, for someone, if they were going for a loan and saying, okay, we need it, would one of the yardsticks be looking at customer retention? How many people they had last year compared to many people they had this year, and are they hanging on to those clients as well? Would that be something that you would look at as well?
Yeah, for sure. I mean, all lenders, depending on what type of industry it is, that's certainly a key factor. We also look at the concentration of, if they're doing business with X company, and if there's a concentration of 30 or 40% for just that one client, that also kind of sends up a bit of a red flag, because if they ever lose that client, that's going to have a very negative impact on their business, on their bottom line and the top line. So, all of those factors, Joe, you make a great point on some of these things. All of those factors are really seriously considered. And, lenders really want to mitigate their risk, and you really can't blame them,
Tell me, Gene, you've been in the game a long time, and I'll ask you the question which I asked a lot of my guests. What did you get wrong to get right?
Well, look, if I said to you, we're still trying to figure that out, I mean, I wouldn't be lying. Every day is a challenge. I mean, and every week is a challenge. It's really about the pipeline, strengthening the pipeline, being able to service these people, with the right product. And we always try to fine tune things. I'm a person who really strives for perfection. You can't please everybody all the time, but you certainly can, make your best effort to do so. And that's really been my motto. Make your best effort, do what you can, try to overcome those challenges. But for God's sakes, I mean, these small business owners, all business owners, I mean, they're the nucleus of our economy. And I've really had a heart for these folks and try to help them now and going forward.
I think you're spot on there because people forget that small SMEs are the lifeblood of a country. You could be driving up a street and down a back alleyway, there is a manufacturing, who's employing 20 people. Or you could go somewhere else and there's a car dealership with, employing 10 people, or someone sheet metal, or whatever it may be, that no one ever really thinks about. But, these are the people that build our economies. And I think we have to
That
respect that. Yeah.
that is absolutely correct. I mean, they put it on the line every day. I look at this is not my first rodeo. We've had a couple other companies, but I kind of landed here, and I'm really enjoying it. I mean, you hear all types of stories, and we really have a passion for small business owners, and we really want to get them really where they need to be. So,
Tell me this. What's the one piece of business advice that you would leave small business owners with today?
love what you do, and if you're not loving what you do, get out of it and do something else.
Yeah, perfect. Jane, if someone wants to reach out to you, talk to you about, requiring a loan for the company, how can they get in touch with you?
They can visit us online at capitalbizsolutions.com. They can certainly call me directly at 508-864-7758. My personal email address is gene@capitalbiz.net.
And the last thing as well, I want to ask you is shout out your LinkedIn as well. Shout out your LinkedIn. So people, if they want to reach out to you on LinkedIn.
I will. Geez, I'm trying to think exactly what the URL is, and I can't off the top of my head, but I will get it to you, Joe. I will
Yeah.
certainly
Well,
get it to
just,
you.
they'll find it by your name anyway. That's
Yeah,
the
they will
idea.
find it by my name. It is Gene Amato. And if you look up me in your search bar, I mean, I should come right up on LinkedIn, you know.
Gene Amato, I'd like to say thank you for coming on the show. It's been very informative, and I just hope, well, I know that people out there will listen, and if they need to get some help, you're the right man to go to.
Joe, thank you. It's been a pleasure. Anytime, anytime you want to have me back, for another segment, we'll drill down a little more. That's fine. And thank you very much for the opportunity, and wish your clients and your people all the best for us.
Take care.
Take care.